Okay, the key changes for PAYE returns in 2024. Currently, there are no key changes except for the ones that have always been in existence. If we look far back to 2004 PIT Amendment Act, which was amended to 2011, the old rates of which PAYE returns is being filed, the rate is from 5% to 25%. However, in July 2011, it was amended to 7% to 24%. So the changes there is the gross is initially the gross income, where you will have to calculate your CRA. CRA is the Consolidated Relief Allowances, which has actually taken over the allowances that was being done initially in 2024. In 2004 we have about 16 tax reliefs, the personal reliefs, the rent relief, the pension, the children allowances, the dependent allowances, and so on. So the Consolidated Relief Allowances has actually taken over all of those 16 tax reliefs. And how is Consolidated Relief Allowances calculated is 200,000 plus 1% of gross income or 20% of gross income, whichever is higher. We pick it and then we calculate it. So that Consolidated Relief Allowances have actually taken over all other 16 allowances prior to 2004, before the transition to 2011. However, the Finance Act has actually amended the minimum wage of individuals that earn 30,000 and below. They've been exempted from personal income tax. Then also the calculation of the PAYE has actually changed from the way we usually do it prior to 2022, where it now says that if you have your gross income, the Consolidated Relief Allowance prior before 2022, the Consolidated Relief Allowance will be calculated first on your gross income, and then you deduct all your relief allowances like your pension, your NHF, which is the National Housing Fund, your NHIS, which is the National Health Insurance Scheme, the gratuity, the life assurance, and so on, every other allowances that is being allowed by the government. So then we deduct that from the Consolidated Relief, the gross that you've actually gotten after calculating your CRA. However, in 2022, the computation has actually changed. It is no more you deducting your CRA from your gross before deducting all reliefs. It is now your reliefs will have to be deducted first from your gross income before you can actually get before calculating your CRA on whatever balance that is remaining. Then after which you get your taxable income, where taxes will be calculated. So basically it's just that is just the only changes that have actually occurred. And then in 2022, where it's also saying minimum taxes should not, minimum wage earners should not be paid, should not, let's say, PAYE deduction should not be remitted on whatever gross they get. So the 7% to the 24% is dependent on your taxable income. Where your taxable income is not up to the first 300,000, at that stage, if you are not also classified as the minimum wage earners, in that kind of scenario, you're meant to calculate a 1% of your annual gross, which is the minimum tax payable. So in 2024, when you're filing your returns, there's really no changes except from the ones that have been in existence, which I believe every individual or every employers out there are doing the right thing in terms of PAYE deduction and remittances. Yes, there is a new compliance for all employers who are resident in Lagos, or for employees who are resident in Lagos and other states. And the compliance is for all employees to have a payer ID, in quotes, just as Lagos State we call it, and other states could also be tagged as tax identification number or also taxpayer ID. So it is mandated that all employees or all employers register the employees to make sure they get a payer ID. This payer ID is unique to employees, even where a situation whereby the employees leave the organization. That same payer ID is what they will be using all through till the retirement age. So it is very important that all employers register their employees in getting their tax identification number or taxpayer ID. Yes, thank you very much for that. As we all know, the PIT law has mandated all employers to make sure they comply with the filing of returns for 2024, or we could say for the preceding year basis. This annual returns entails all the list of employees that have worked in an organization from January to December of the year. Let's say for 2024, for example, it also means that all employees from January to December 2023 will be filing their returns in January on or before 31st January 2024. So employees that work in an organization, the employers are expected to deduct the pay as you earn, which we know as the tax. I'm sure every one of us would have understood or know what pay as you earn is. So it is mandated that all employees the taxes are deducted and it is remitted as a when due. Also, monthly payee remittance is meant to be paid on or before the 10th of the following month. So it is expected that all employers have remitted all the taxes for their employees by up until January to December 2023. So by January, you have the gross income. There's a form that is being filled. The form is being called Form H1, where it entails all the list of all your employees for the year, the gross income they are earning, the annual tax that have been deducted so far. Also to add, the annual tax in that schedule needs to be in line with the receipt schedule. That's the receipt of remittances for each of the employees. Also in that column, also there is a space where there is a development fee, which is 100 naira per staff per year. So that is also included in the schedule. Also in the schedule, we have the email and phone number of each of the employees. Also part of the schedule, there are 3 schedules, or let's say 4 schedules. One is the Form H1, which I've already explained what it entails. The second one is the schedule of the receipts, the receipt of payee that have been deducted and remitted from January to December 2023. You have to list it out, the date of payment, the amounts paid, and the receipt number. Also, let's be also to take caution of the schedule in the Form H1, the payee, the annual tax paid in the Form H1 need to be in line with the schedule of receipts or the remittances for the year. Also, the third schedule, in that same schedule, we have the projected gross. This projected gross salary is an expected, just the way the name sounds, is a projection that from year 2024, the list of the staff you believe or you projected that will still be with you as at the time, and the salary you're expecting to pay them, the gross salary, which is the annual salary you're expected to pay them. This amount at the end of the day might increase, or some of the employees might leave as at the time, but this schedule is also important. It also needs to be included in the schedule while filing your 2024 annual returns. Also, the last schedule there is the withholding schedule. The withholding schedule is the withholding tax that have been deducted from January to December for both, whether if you have contracts with individuals or enterprises for the year, you're expected to deduct a withholding tax that is due to the State Internal Revenue Service. So these schedules are very important. Just the way Lagos State does this, you go to the e-tax. As I mentioned earlier, the e-tax, all employees are expected to be on e-tax as at the time of filing. The moment you file your returns and maybe one of your employees do not have a pay ID, or the pay ID is not linked to the e-tax, that such individual will be expunged from the schedule and the platform will not recognize such individual. In that kind of scenario, this automatically means that such employees will not get the tax clearance each time they request for it. So it is very important that all employees or all employers make sure that the employees have a tax identification number, so that when such employees wants to or request for a tax clearance certificate, without the annual returns, without employers filing the annual returns, there is no way the employees can actually get the tax clearance. So there are two things. First thing, employees need to get the tax identification number. The second one is to make sure that all your employees from January to December 2023 are in these returns while filing in January. That is the part of the employer. The part of the employee, as an individual or as an employee, you are also mandated to file your returns personally. This kind of scenario, you have your own payer ID, you log on to the site, you create a password, you register with eTax. Now the question people will ask is, oh, I don't have any other place I'm working, it's only salary that I'm earning. Yes, fine, as long as your employers have filed your returns, you also as an individual, you are expected to also file your own returns. If it's just the salary you're earning, fine, just put in the salary, file the returns, and then confirm your submission. This will actually help the tax authority to make sure that, oh, this person, the only thing is earning salary, and they can see that you file your returns. That is for employers doing their statutory obligation for employees. Now, on the other way, is not just for company alone filing returns. Business owners also, if you are into partnership, you're a director of a company, you are also expected to file your returns as well. If you are a director of a company, the time for your filing has to be 31st March 2024. You are also mandated to file your returns. These returns include your salary, every source of income you earn, rental income, dividend, pension, whatsoever income you earn for the year. You are expected to file it on the e-tax or at your local tax authority. By the time you are not applying for tax clearance for that year, all this gross sum of your income will be included in your tax clearance, also your annual tax paid. So it is very, very important that both employers and employees file the returns just for them to get the tax clearance certificate.